I want to talk for a minute about one of the biggest traps that we find in bankruptcy, and that is dealing with a person's federal income tax refund. Because a refund is a debt owed to you by the federal government. It's like any other debt that you may have. It is an asset that you own, and if it's not otherwise exempt, the trustee is entitled to take that asset, and they will take it every time. I can't tell you how many times I've been in the bankruptcy court and watched a do-it-yourselfer suddenly learn that that $5,000 or $10,000 tax refund is going to be forfeited to the bankruptcy trustee. And it happens very simply because in the bankruptcy petition, one of the questions that you answer is listing who owes you money. And invariably, people never think of the fact that they're owed money by the federal government, which is accruing every month that you're working. So let me give you a good example how this can happen. Let's say someone's filing their bankruptcy petition on October the 1st, which is the first day of the fourth quarter of the year. So they have already accrued 9 months or 3 quarters of refund. They're not going to get it till the following, say, February, but it has accrued and it is owed to them. So they file their bankruptcy petition on October the 1st. They've never thought about the tax refund as money that is owed to them. They go to the 341 meeting, the meeting with the trustee, and invariably they get hit with the question, do you expect to get a tax refund? They answer, well, yes, last year we got $4,000 and we expect to get the same amount this year. The first thing they're going to hear from the trustee is that the trustee is entitled to $3,000 of the $4,000 because they're entitled to 75% of what will ultimately be the total accrued, because 75% of it is what had accrued between January and October 1, the day they filed. And I've seen people when they file in January or February, and here they think that in the next couple of weeks they're going to get a $5,000 or a $10,000 check, and they suddenly find out what that they're going to end up with is nothing. So this is an area that people have to be very careful about. Very often as we reach the end of the year, we tell people that what we're going to do is get everything ready to file their bankruptcy, but we are not going to file it until they have filed their tax return, received the refund, and spent it, so that there will be nothing left for the trustee to claim as non-exempt assets. As always, remember in bankruptcy, the devil is in the details. So if you think you have this kind of issue, seek professional advice.